Hi and welcome to Swissquote's Daily Market Talk. It's Monday, May 12th. The weekend talks between the US and China went well, according to the first statements from both countries. Optimism says present at the start of this week. Equity futures and the US dollar are up. Gold and Swiss franc are down this morning. So more details are to come in the next hour. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So the weekend brought good news. The negotiations between the American and Chinese officials this weekend here in Geneva went well. Apparently, as the US Treasury Secretary, Mr. Scott Bessent, said that substantial progress was made during these talks, and the comments from the Chinese officials were a bit more measured because, well, they're Chinese and not American, but the Chinese officials also said that they have made a sound and sustainable development during these weekend's negotiations. Now, what exactly that means will be clearer later today at an official statement from both countries when both countries will actually say what has been talked and what they agreed on. But the foretaste of the de-escalation is giving a boost to risk appetite this morning, although the gains that we saw in Asian indices remain moderated. Well, we don't see these crazy rallies, but the CSI 300 index will open the week above its 50-day moving average and traded past the 100-day moving average, even though the Chinese index paired earlier gains and is up by only 0.61% at the time I'm talking here this morning, while the Japanese Nikkei index kick-started the week as well above its 100-day moving average, but failed to clear the 200-day moving average offers to the upside. The index is up by 0.26% at the time of talking, and the European and US futures are, well, in the positive this morning and pointing at a solid start to a promising day, while Nasdaq futures are leading gains with almost 2% gains at the time I'm talking here this morning. So optimism is there, but not everywhere. Pharmaceutical stocks, for example, are under pressure this Monday on Donald Trump's plans to order a cut, apparently, in US prescription drug costs. He doesn't want Americans to pay more than people in countries with the lowest prices. How fair. But anyway, that's politics. In the FX markets, the US dollar is slightly higher this morning on the back of trade optimism, while Swiss franc and gold retreat. A price of an ounce of gold is trading 1.5% lower on easing trade fears. China and commodities sensitive Aussie, on the other hand, feels bullish, but trading in oil and copper hints at a cautious optimism as investors around the world have their doubts that the upcoming statement from US and China will make a substantial change to the trade situation of the moment, as Donald Trump, for example, was calling for a tariff relief for its Chinese imports from 145 to 80%. So I am afraid that sailing will still be long and bumpy before reaching calmer waters in this trade war. Now, according to Kalshi, so that's obviously a platform where you can bet on this kind of events and their outcome. While the US tariffs on China is expected to be around 68% after the first negotiations, and people who bet on this platform see no more than a 36% chance for the tariff rate to go below the 50% psychological mark. So let's see what happens. But the fact that the first talks went relatively well in respect and kindness is obviously a good sign and couldn't come at a better time for both countries, because in the US, the company executives have been warning that excessive tariff rates could lead to pandemic era-like disruptions, empty shelves in the US stores, and rocketing consumer prices, while the Chinese see their exports take a severe hit also from these tariffs, these excessive tariff rates, and the end of the so-called de minimis exemption for the Chinese low-price retailers. Imports in the US. So in the sense, Temu and Shein, remember, reportedly saw double-digit declines in their exports to the US. So we talked about that last week. Now, interestingly, though, the bad news were already almost mostly priced in these Chinese retailers' prices, and PDD's share price, for example, has been rebounding since an initial slump on the tariff escalation. So de-escalation will, well, with little doubt, encourage a return above the 200-day moving average here. Elsewhere in China, JD.com, Tencent, and Alibaba will be reporting their first quarter earnings this week, and it will be quite interesting to watch their first quarter numbers, as the first quarter of this year is also the first quarter the Chinese companies have effectively entered the global AI race. Therefore, their first quarter results could bring the Chinese AI talk and optimism back on the table. Quickly looking back, the arrival of DeepSeek in January opened the way to other Chinese AI models. Remember that? So Alibaba's model, for example, helped almost doubling its stock price between January and March this year, but then the trade tensions with the US took a toll on optimism, and the stock gave back 2/3 of the early year gains before rebounding strongly since then. So I personally think that the Chinese AI story will actually be developing further and give the technology investors an excellent, a very interesting opportunity to diversify their technology portfolios. Not only that, the AI buzz has not been fully priced in for the Chinese equities, for these Chinese tech giants, but the Chinese government's support, very explicit support for the Chinese technology giants, and the country's broader support to support its economy from fiscal and monetary point of view, should also maintain appetite and help the Chinese technology champions extend their 2025 rally. So the Chinese tech earnings are to watch this week closely, along with the US Walmart's first quarter results and their predictions. Now remember, Walmart wanted the Chinese to take on the full cost of the US tariffs, to which Chinese answered, no thank you. So eventually, the company, well, decided to support these costs itself for the sake of maintaining its supply chain undisturbed, at least for the moment, in a decision that actually contrasted its competition, which, on the contrary, decided to reduce their Chinese imports due to, well, these high tariffs. They just didn't want to pay for these tariffs. So let's see what Walmart has to say this week about the latest developments on the trade front and its plans to navigate these agitated waters. The thing that's different with Walmart is that Walmart is in a very good position to amass consumers when the economic conditions are not looking good and when people are actually losing their purchasing power. So this is also certainly why Walmart's share price is still close to its all-time high levels. But that optimism is less apparent elsewhere. 62% of American CEOs expect a slowdown and recession in the next 6 months, and that's not necessarily positive for their business, and the latter weighs on investment plans and earnings forecasts. So inflation expectations have gone up in the sky, remember, over the past months as well, and the Fed sounded quite cautious last week during its FOMC meeting regarding how the tariffs will impact growth and inflation in the US, warning that there is a chance that inflation will experience a stickier rise than just a one-off and temporary heat up due to the tariffs. So tomorrow, the US will be releasing its latest CPI update. Both headline and core inflation figures for the US are expected to have rebounded in April on a monthly basis. A stronger than expected read could eventually back the Federal Reserve hawks and the idea that the Fed should wait a little bit before cutting its interest rates to avoid, well, seeing inflation out of control. While a softer than expected CPI figure this week could add to the trade optimism of the moment and eventually revive the Federal Reserve dose. Now, looking at the numbers, activity on Fed funds futures assesses less than a 15% chance for a June rate cut from the Fed at the start of this week. As such, easing trade tensions is the only way to keep the optimism going in the financial markets, and good news can't come soon enough. So this is all for this Monday. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Blue Sky, and Telegram for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.